welcome to this week's Money Market Update. Nothing like a Saturday morning espresso. Warren Buffett has this phrase where he says, there are decades when nothing happens, and then there are weeks when decades happen. One of the things for investors in financial markets is that we often want those weeks to come around where everything seems to happen for us in a short period of time. You know, we start to make money quickly. And when we look back at 2020 and 2021, financial markets dipped very quickly when we first saw the pandemic, but then they recovered so quickly. Monetary policy was so loose, financial markets took off, asset valuations all around the world skyrocketed. I mean, it is so true, that phrase, when it comes down to nothing happens for a long period of time. I mean, this house that I'm sitting in, Janine and I built, coming up 11 years ago, and probably for 7 or 8, even 9 years, the valuation of this house here in Noosa might have gone up maybe 2% a year, maybe 3% a year. And then you have this event happen and the valuation of the property goes up 100% in the course, in a very short period of time. And when you look back at history, the same thing happened in when our family moved to Queensland in the mid 80s, between about 86, 87 through to about the mid 90s. Southeast Queensland boomed. And when you look at financial markets, the same thing occurs. Our share portfolio rose 90% in the 18 months after the pandemic through until the end of 2021. And basically in 2022 so far, it's pulled back slightly, gone sideways, gone up a little bit, gone sideways. And the potential is that could happen for the next year or two. And the thing that we need to get used to as investors is that the valuations that we want to see with respect to the growth, it's going to happen. But unfortunately, most people don't stick around long enough in a dollar producing asset to see it have those very strong periods of growth. And right now, we're seeing in the financial markets, as I've been talking about for a number of weeks here in this weekend money market update, we've seen a changing of the guard. We're seeing monetary policy start to tighten. We're seeing the free money stop. And when you see that happen, you get a changing of the guard with respect to where that money is positioned in some businesses. Money managers move that into other businesses. And you just get this natural period of sideways price action. But the interesting thing is you can't afford to sit on the sidelines and go, oh, well, I'll wait till things get better and then I'll put my money in the market. I mean, we've been buying shares in great quality companies all through the period of January, February, March, and April, putting money to work because nobody knows when this volatile sideways period is going to finish, and we're going to see that explosive growth again. We may see a new high in the next 6 to 9 months. We may see a new low. But the bottom line is you can't afford to sit around and be pessimistic about the short to medium term and think that you're going to time things for the longer term. So like I was talking before about things happening in short windows of time, but you've got to make sure you stick around in the investment to be able to experience that. Over the course of the last 100 years, we live better today than the richest guy in the nation you live in lived 100 years ago. And unless we see a nuclear war, nothing is going to stop human progress. Nothing. And therefore, it's pointless sitting around thinking, well, times are not great right now. I'm not going to invest in this or I'm not going to invest in it. Just invest in dollar producing assets. Dollar producing assets are things like companies, property, these types of things. And here at Trading Mastery, we're obviously investors in the share market. We're buying pieces of businesses. We are not buying stocks. We are buying pieces of businesses. And we're buying great quality businesses that are dollar producing assets that can continue to grow their earnings over time and the share price goes higher. That's what you want to be investing in. Is gold a dollar producing asset? No. Is cryptocurrency a dollar producing asset? No. There are lots of things that you can speculate on that are just simply a gamble, a bet. They are not dollar producing assets. I will guarantee you that dollar producing assets over your lifetime will beat all other forms of investment, provided you buy them at the right price when they're discounted. They're good quality dollar producing assets, and you're going to do just fine. But the point I want to stress today is you can't speculate and get in and get out and jump in and jump out. You have to own these dollar producing assets for extended periods of time. So what's the first thing that most people think about when they're looking to trade and invest in financial markets? Well, the first thing they're generally thinking about is how much money can I make if I'm right? Whereas really the question needs to be, what could I lose if I'm wrong? And this comes down to an important scenario here, because most people think about the upside rather than the downside. And while some pessimists think about the downside too much, you have to really be an optimist if you're going to be a great investor over time. One thing that's so important to realize is that the defining difference between a great investor and someone who doesn't have success in financial markets isn't their IQ. But what it is understanding that there are certain times throughout the year that great quality businesses that continue to grow their earnings over time and make more money and see their share prices go higher, due to auction-driven markets that we invest in, even a house can be an auction-driven market. There are times where the price gets excessively overpriced and excessively underpriced because of the emotion of human beings, right? And therefore, it's critically important that if you're going to be a successful investor, you've got to be focused on, okay, what could I lose if I'm wrong? And what could I make if I'm right? What I'll make if I'm right will look after itself over time if I'm buying the right dollar producing asset. But what we need to realize, and most people don't realize this, and I'll give you an example right now of one business, right? Facebook, which has sort of changed its name to Meta. It's currently trading down right now 44% from its 2021 high. This is one of the richest businesses in the world with a very high return on invested capital ratio. It has a very low price to earnings ratio right now. It is an earnings juggernaut, and its share price is 44% down from where it was in 2021. Now, when you look at that now, the earnings the business has, the growth the business has, all of the positive aspects of the business, the margin of safety for investors to invest and buy that business today is a lot less than what it was this time last year. But most people won't touch it because it's trading at such a heavy discount. And the share price has fallen 44%, so there must be something wrong with the business. If you actually understand why the share price fell 44%, which we won't get into this video today, but the reason why the share price is low has nothing to do with the long-term earnings of this business. So what I want you to appreciate is when you're looking to invest in a company, yes, we want to optimistically look at the opportunity for the upside, but we want to look at what is the margin of safety and the risk to the downside. Now, if you're buying businesses at all-time highs or when they're breaking out and going higher, well, the margin of safety is nowhere near as great as someone who's looking to buy a great quality business where the share price has already been heavily discounted because of the auction-driven markets that we invest in. And this happens consistently throughout the year. I mean, another example is Home Depot at the moment in the United States, the US version of Bunnings, trading down about 26%, has a return on invested capital of 38%, has a low PE ratio of under 20%, but people won't touch it right now because the share price has fallen, so there must be something wrong with the business. Professional investors will look at a business like that and say, hey, the margin of safety for me with respect to the downside risk is a lot less now than it was 6 months ago when people were buying it, 30% higher. So that's an important component, and don't take a risk you don't need to take. There are plenty of times throughout the year where great quality businesses are trading at discounted prices where the margin of safety is actually larger than when it was significantly higher. And here at Trading Mastery, we're constantly educating our clients about the specific way in which to actually look for, seek out, and buy those great quality businesses. I want to talk about in a moment what is coming up this week, because we are in the process of building some momentum into a particular time of the year that's really important for markets. Meditation. Have you ever tried it before? There's actually a lot of great investors that swear by meditation. I sort of got into it a couple of years ago. In fact, I hired a really fantastic meditation guru, Gary Goro. Look him up online. He's down at Byron Bay. He has a wonderful meditation resort down there. But I'm going to try and get back into meditation this year in my meditation chair. Let's get off the meditation subject now. Let's talk about what's coming up this week in financial markets. And of course, we are now starting to build some momentum into what is called the first quarter earnings season in the US. We saw a couple of the big investment banks report their earnings last week, Wells Fargo. We're going to get some other banks, Bank of America on Monday. We're going to get some other investment banks. What these banks are doing right now is reporting their earnings in the first 3 months of the year, but banks are a great indication of consumers spending, consumers borrowing, businesses borrowing. And right now we're starting to see some of the CEOs, some of the CFOs of some of these investment banks suggest that there might be some storm clouds on the horizon in the US towards the latter half of this year. Now, as Jamie Dimon, the CEO of JP Morgan, said, hey, those storm clouds might disappear. But I suspect that this earnings season in the United States, whilst the earnings will likely beat expectations, what the market's really going to want to hear about is not so much did they make money in the first quarter, because the answer is most businesses would have and would have done quite well. US consumers are wealthier than ever. But what are those CFOs, what are those CEOs saying about future earnings in the second half of 2022? If they are saying that, hey, we see earnings might drop off, then markets are not going to like that. And that is where we get the mispricing opportunities of the businesses that we want to invest in and buy more shares in. Because these businesses, nothing's going to stop economic progress. Nothing's going to stop wonderful businesses having the opportunity to continue to compound their earnings. But it's not going to be happy days every month, every quarter, just like your business. Whether you work for someone or you have your own business, there are good times and not so good times, and there's tough times, and etc., etc. We're just got to make sure we keep putting one foot in front of the other and keep going forward. And in financial markets, as investors, we get an opportunity to buy these great quality companies when they're mispriced, and that often happens through earnings season. So make sure that you're aware of what these CFOs and CEOs are saying. And if you own a company in your portfolio, you need to be reading those quarterly statements. So that's it, guys. That's what's happening in markets right now. No major changes. We're still looking for opportunities. We're still taking advantage of opportunities. And I hope you're keeping up to date with me here. If you haven't already subscribed to the YouTube channel, make sure you do that. Until next time, I'll get back to my meditation.